Welcome to Industry Focus,
the podcast
that dives into a different sector of the stock market each day.
I'm your host, Emily Flippin.
I'm Jason Moser.
I'm Nick Seipel.
I'm Dylan Lewis.
And today we're talking financials.
Today we're talking consumer goods.
Wildcard Wednesday.
And we're talking energy.
And today we're talking tech.
Let's dive in.
Welcome to Industry Focus. I'm Nick Seipel. Today I'm excited to welcome my special guest, Ben Kohn, CEO of the PLBY Group. The company just reported second quarter earnings yesterday, its second report since returning to the public markets via a SPAC transaction earlier this year. Ben, thanks for joining me today.
Thanks for having me. Appreciate it.
Yeah, great to have you here. Just off the bat, Ben, you hear PLBY Group. I don't think that's a company maybe that everybody is familiar with, but the brands that you own, people are much more familiar with. So just high level for folks who've never heard of your company, what is PLBY Group?
Yeah, PLBY Group is a holding company. Our largest brand is Playboy. I think most people have heard about that. Products are sold in 180 countries, drives over $3 billion of consumer spend. Probably one of the top 3 or 4 most recognized brands in the world. But we're a holding company all focused on pleasure and leisure in people's lives. And in addition to Playboy, we own Yandy, which is an e-commerce site selling lingerie in the United States. Lovers, which is a sexual wellness chain of stores and digital footprint. And then we just recently acquired Honey Birdette. Really excited by it. One of the top lingerie brands, in our opinion, in the world, formerly based out of Australia. Business is growing 40%, $80 million of revenue this year, and just entering, in a large way, the United States and then other Western Western markets in Europe.
Yeah, absolutely, Ben. So I want to talk about, I mentioned off the top, so Playboy returning public through this transaction earlier this year. Now you have this big portfolio of brands. You've been involved with the company since it was taken private back in 2011. Why now all these transactions? So Yandy was a 2020 transaction. Those other 2 companies you mentioned 2021. Why now all of a sudden this activity coming back public, all that stuff?
Yeah, so maybe it helps to reset what the company was and what the company is today. So when we took the company private, I led the take private transaction in 2011, a long time ago. It was a media business at the end of the day, right? That's what Hef cared about. He cared about the magazine. And in fact, when you go back and look at the merger agreement, which is publicly filed, there are 2 things that he wanted when we took the company private. He wanted to run the magazine until he died, and he wanted to live in the mansion until he died. And so you look at that evolution of the business to about 2017, when I took over as CEO, it was a media business, which generated the bulk of the revenue, and then it was a licensing business. So they offset the media losses by licensing out the masthead or the Playboy trademarks in consumer products. What we pivoted to, and because I don't believe that you can really be a media business by definition selling advertising if you're trying to be a brand. And I always viewed this company as the original lifestyle brand, right? The first product this company ever made was a pair of cufflinks. It had casinos, it had hotels, it had a whole host of things. That doesn't sound like a media company. That sounds like a lifestyle brand. And so the focus was really to shut down or pivot the company away from media, which I thought was continuing to be challenged moving forward, and especially in some of the areas we were in with the proliferation of the internet, and really focus the company back on its roots as a lifestyle brand and all around consumer products and digital experiences. And that's what we've done. And so when you look at the business today, it's a very different business than when I took over back in 17. This is a business today that, the large majority of revenues, 90+% come from consumer products. And I think we're just getting started. We're also in the process of pivoting or changing the model from licensing to that of owned and operated. I think there's been a shift in how consumers buy, really D2C or e-commerce, and therefore licensing is a less efficient model for that. And we can own a lot more of the spend. So that's $3 billion of consumer spend. The challenge with licensing is you're getting pennies on the dollar for that, right? 2 to 3 cents on the dollar for that. If we pivot and we own that, not only can I drive the lifetime value of the customer up and the average order size because I can sell you more products, but I can drive my revenue up. And so when you look at that, there could be a 20x increase in revenue just if you model all it out, right? And actually an increase in EBITDA by 5 or 6 times as well.
Yeah, so you can just capture some of that spend. So I wanted to, well, there's lots of different directions I wanted to go off here. Maybe let's stick with Playboy here. So you talked about this transition the company's gone through. I think on the call you said historically Playboy is a content site. Now it's a shopping site. Talk about the progress you've made along that, and where Playboy fits into this overall family of brands that you've developed over the past year and a half or so.
Yeah, I think, look, Playboy is a hero brand at the end of the day, right? It is one of the top 3 or 4 largest brands in the world. And what's so interesting about Playboy is Playboy can go high and it can go low, right? In price points to consumers. It can be mass, it can be prestige or premium, and it can be luxury. And there's a history of that. Honey Birdette is a luxury brand. It's a very high price point lingerie business that is obviously, experiencing phenomenal growth, and I think will be $1 billion business for us. And then Yandy and Lovers tend to be more mass market overall. And so I think we have a really interesting portfolio of brands. And what we'll end up doing, long term with Lovers and Yandy is we're working on right now creating a sub brand, leveraging that Playboy masthead to turn those businesses more into private label products. But the growth for the company is around consumer products and digital experiences. And so when I think about an ecosystem that couples both virtual goods with physical goods, I get really excited because that allows us long term to not only drive recurring revenue, but superior margins as well.
Yes. So when you talk about the shift to shopping customers, selling consumer products, sexual wellness, all those sorts of things, it sounds like a different type of customer than would have historically been the subscriber to the magazine, that sort of thing, maybe gender different, demographically different. How do you think about your customer today versus what it may have been in the past? Yeah.
So when I took over, we were probably 90%, 95% male, female. What we announced in the first quarter of this year was that 55% of our customers were women, which is a great, we have 75% of our workforce actually at Playboy today are women. And so it's great to see that, very different than when we took over. The numbers we announced yesterday, I'll just give you this. Our traffic in the second quarter only grew about 9.6%. But what's so interesting is our shopping customers grew 70%. And so we've made this transition of our audience to that of coming to us for content to now that of coming to us for product. And I think that will continue to evolve and accelerate moving forward.
Yeah, one of the things you talked about on the call, I wanted to drive into a little bit more is how you're doing that from a marketing point of view. You talk about focusing on influencer marketing and kind of quick turn. Talk about your marketing strategy and what you're doing to try to make that, I guess, mind shift among your customers that you're trying to capture.
Yeah, look, we benefit because the brand is extremely popular and hot on Gen Z and with Gen Z. And I think it really relates to a lot of the causes that we have fought for the last 70 years of the company's history, right? Equality, LGBTQ plus rights, civil rights, et cetera. This company has been at the forefront advocating for equality and for free speech. And so when you think about that, we have a number of influencers. I hear all the time about the number of people on TikTok just organically wearing this brand. We saw this hoodie challenge develop organically a few weeks ago. We then got into it. And then there's influencers, the Playmates, the former adult stars, the Bretman Rocks and others that we've worked with. We launched a t-shirt with Bretman Rock in June. Geared around Pride. It sold out before he was even able to post on his Instagram and his social media that. And so we have many of those coming. We have a sub brand called Playboy Labs, which is really our collab. We've done things with Steve Aoki and others in the past. And you'll start to see a more consistent level of product drops with influencers moving forward. But what we benefited from, and what's so interesting about HB or Honey Birdette as well, is a lot of this is organic. It's people that are going out and buying the product and wanting to wear the product.
Yeah. So you talked about that hoodie kind of thing that popped up on TikTok. Are y'all implementing like a print on demand type model? How are you doing these quick turnarounds whenever you see things emerging on social or what have you?
Yeah, so it's a combination of both print on demand and then our basics that we have in stock all the time. And that is continuing to evolve. We've brought in a great digital e-commerce team. They've only been on the job for really 3 to 4 months now, but people that have run big businesses. And so it's a combination of both. And then what we'll continue to do at Playboy.com over the coming months is we will continue to evolve the product offerings we have more, a combination of both drop culture, but with everyday on products, right? Really geared around lifestyle and the 4 categories we've talked about before, which is apparel and accessories, sexual wellness, gaming and lifestyle, which are home goods and other things, and then beauty and grooming. And beauty and grooming's a category. We have a very successful fragrance business in Europe. We just brought it to the United States. That's a licensing deal, but we're now developing our own beauty and cosmetics line, which is right now in the formulation and design phase, and that will be launched next year.
Yes. So you've talked about some of these brands moving into the lingerie market really particularly aggressively. The Honey Birdette acquisition. I want to talk about what's going on in the space right now. You've seen Victoria's Secret kind of pull away from its Angels program, really run away from the more, I guess, overtly sexual advertising. You look at Honey Birdette, the other side of that coin. So what do you make of what's going on in the market, and why your approach, going the opposite of what some established players are doing, has some room for success?
Well, I wouldn't say that we're going opposite. I think that without getting into disparaging Victoria's Secret, I think they've lost their place in the market. It's a highly fragmented market. There is a way to be sexy without objectifying. And I think that, if you look at what's happened to Playboy and what the content team and marketing team have done over the previous 3 years, I mean, look at the diversity in talent that we work with. It's a very different Playboy than it was back in the Heft days. And I think it really speaks to what's happening in society overall. Honey Birdette, obviously, very sexy lingerie, comes out of Australia. Eloise, who's the founder of the company, has just moved to the United States. Obviously in Australia, your diversity in talent that you work with is different than what it can be in Europe and in the United States. And so I think you'll continue to see it. But again, we're not scared of sexy. I think it's a question of doing it in the right way that's not objectifying and that's really owning your own sexuality. And what's so great about both companies together, Honey Birdette is almost 100% female. It's a company founded by women for women. And and Playboy, when you look at it today, 75% of our workforce, and this is before the Honey Birdette acquisition, are made up of women.
Yeah, absolutely. So one of the things I wanted to talk about, so we've talked a lot about private label, trying to doing direct to consumer, this growth area for the business. One thing you talked about on the call is really significantly increased your long-term revenue margin, right, from 300 million by 2025. To 600 million. So I see that, obviously great to see that number increase so much. On the other side of this is, why is this surprising you so much of the growth that you're seeing? Like what was the biggest surprise that took place to see this huge increase in your guidance?
Look, the guidance we gave, going from 300 to 600 after being public for 6 months, really speaks to the stuff that we have in our pipeline today and the pieces that we've assembled with the acquisitions that we've made. So we'll be launching, and we talked about this yesterday on our earnings call, Playboy or Playmate lingerie moving forward, leveraging the Honey Birdette skill, the design team and sourcing team. And so we just have a lot more arrows in our quiver moving forward as we've made that transition from a licensing business to that of an owned and operated business. And look, I think there's a lot of upside to that number. I mean, when you look at it, that number is based on sort of like a 20% growth on D2C and a single-digit growth in the licensing business. And that doesn't include if we decide to take back more categories, which we have the option to do that are already licensed out. And it doesn't include other acquisitions that we might make in the future. So, I feel very good about where we sit. I think the growth prospects for the business today are actually greater than when we went public. We just have to stay extremely focused as a team. And then on top of that, some of the digital revenue streams that we'll be adding here, over the next 6 months to a year, geared around membership and NFTs and blockchain, I think long-term are going to allow us to actually accelerate our growth and actually enhance our margins.
Yeah, so I want to talk about some of these new product offerings. I mean, why are you so excited about NFTs? Do you view this as a fad or something that really has a lot of staying power? And if so, why?
Yeah, look, I think NFTs are going to go through multiple different cycles. I don't think it's a fad. I think it's here to stay. I think you have to think about it as the intersection of content and community. And so you look at what Top Shots has done, it's really, really interesting. We have one of the most valuable archives, in my opinion. We have 10 million pieces in our archive. We have a 5,000 piece art collection. We have unbelievable influencers that we work with that have huge audiences and adult stars and playmates, et cetera. And we can bring this together in a cohesive ecosystem. NFTs, we talked about this yesterday, sort of like the dial-up era of the internet right now, but it's really gamification as well. And I think this brand, of all brands I can think of, works so well at that intersection of digital and physical. And so we can host a live Halloween party in Las Vegas, and we can couple that with a virtual party online, right, where you would have to be a member to attend. We can sell you virtual goods for your avatar coming to our party, and we can sell you physical goods as well. And so I think this brand is really, really well positioned as consumers want more and more lifestyle driven offerings, but it doesn't have to be physical offerings, in place. It can be virtual offerings as well. I mean, look what Travis Scott did on Fortnite a year ago with that concert where he had 27+ million people tune into it. I think that is the future. I think NFTs really sort of, lead to the decentral, of the artists as a community.
Yeah, I mean, I think you mentioned the kind of collision between community and content. I think one area that makes sense kind of to me is you have people that are very engaged in this space, and this is an area where you can kind of market to them and get paid to do so. I mean, how do you think of this as just a way to get exposure to this younger audience?
Well, look, I mean, I think we have exposure to the younger audience, but it's the people that we work with. And I think it's also that when you look at younger people today, obviously younger than I am, it's not about what's hanging on your wall. It's about what's in your digital wallet. And so you look at social media in general, like, why has the camera, you look at Snapchat, Instagram, et cetera. Why has the camera taken over? Well, because there's value in what you're associated with, right? There's value in what you're posting online because it defines you to a much larger community. When I grew up, it was my 10 friends or 15 friends. That was your community. Today, you look at young people, their communities are huge, right? And they have thousands of followers because digital allows you to do that. And so I think we have some of the most iconic IP in the world, right? This is 70 years of Americana, but more importantly, it's also the influencers that we work with today. And creating this cohesive ecosystem, I think, will not only drive our digital sales, but our physical sales as well.
Yeah, so you mentioned earlier, so that this revenue guidance doesn't account for future acquisitions. It's all organic that you're trying to project into the future. But obviously, you have a background in private equity. There's folks on your management team from Match Group, IAC. These are folks who have done deals in the past. So as you're looking for potential acquisitions or to invest capital to bring assets back in house that are licensed out, what are you looking for? What are the criteria that jump out to you as this is something I want to invest in?
Yeah, look, it's putting the pieces together that allow us to accelerate our growth. So we've done that with the acquisitions to date. The Yandy team is unbelievable at design and sourcing. That expedited and accelerated our growth or launch of Playboy lingerie by a big margin. And so not only that, but they have designs that have never come out of Australia that we can leverage moving forward. Moving forward for other acquisitions, we're open to it. We have $85+ million of cash on our balance sheet today. I would see, things in the digital world coming into light moving forward as we look to build out that ecosystem. But again, we have all the pieces we need to achieve the numbers that we've put out there today. But I think there's ways to accelerate that. There's ways to move some of our licensing partners to JV partners where we can book that revenue and run that e-com where we can grow our consumer base even more, which should lead to acceleration of revenue because the larger base I have, the more LTV I can drive or lifetime value of that customer I can drive long-term.
Yeah. So you mentioned, go ahead, Ben, sorry, finish.
Yeah, and just speaking to Lance and the rest of the team, I mean, what's so exciting for me is I love to surround myself with people that are much smarter than I am. And the level of talent that we have brought in and are starting to even continue in our pipeline is just awesome to see. And that's what's so exciting about going public is not only now do we have the capital to do what we needed to do to transform this business, but the level of talent we're getting is night and day from where the company was a few years ago.
Yeah, Ben, so we've talked a lot about kind of the direct-to-consumer business. You mentioned opportunities to transition these licensing parts of the business over to maybe joint ventures, and that kind of introduces China outside of the U.S., very different brand in China than it is in the US, different business model as well. When you look at licensing, you just talk about compare and contrast this China business, international business, to what you're building here in North America right now.
Sure. Well, look, China's its own ecosystem. Okay. They've never really seen the magazine, or let me say this, they've never seen it legally in China. Right. And so the company went to China 20 plus years ago, and it was really Americana at the time, and has really become almost an own Chinese business, or China business within China. It's largely menswear today. It is all licensing. We have 3 primary licensees, and then 3, what I'd say, is smaller licensees in China. But what's so interesting about China is the consumer demand for the brand. And so last year we did $1 billion of e-commerce revenue in China, or let me say that our partners did $1 billion of e-commerce revenue. And so when you think long term about how do you aggregate revenue, I think there's a way to change that business model. Now, it's not going to happen overnight. These are partners that have been longstanding partners of the company 15 plus years, and we want to make sure that we include them in this. But they're manufacturers as well. And so I think there's a way to actually aggregate that e-commerce revenue long term. And, the business is growing in China. We're just entering the women's category. We just did a kids deal. India is a huge growth opportunity for us. We'll do India, learning from the mistakes that the company made in China over the years and the way we're structuring those deals. But, we've signed a deal to open Playboy beer gardens there. We've signed a deal with a gaming partner to launch Playboy Rummy in 2022 in India. In fact, we just signed last night a deal to relicense our US iGaming rights. Can't tell you who the partner is yet, but very excited by that, and especially the growth in iGaming in the United States moving forward. But China, China, I think, can double in size over time. And I think we can change the business model in China over time as well.
So you mentioned, I just want to talk about Playboy Kids, just because that just blows my mind that there's a Playboy Kids line. Number one, what Playboy Kids products are out there? And number 2, are we seeing a unification? Is Playboy Kids going to leave China? What's the deal there?
So I don't know if it will leave China. So I'll tell you a funny story. Okay. So back when all of us could travel and life was normal, I was on the Bund in Shanghai in a car coming in from the airport with my head of licensing. And coming across the street at the stoplight was a little kid wearing a Playboy sweatshirt. And I didn't think we had Playboy Kids at the time. He needed to go relieve himself on a tree on the Bund side of things. And I looked and said, wait, do we have a licensing deal for Playboy Kids? He says, no, that's all counterfeit. So one of our licensing partners thought there was a huge opportunity for Playboy Kids. They're actually opening, or we're going to open their first store. They're obviously doing e-com, but open physical store in Shanghai this year. And it's an opportunity. Again, the brand is very different over there than it is here. Over there, it's been a fashion brand. That's what it's been for 20 plus years. Obviously, in the United States, you have the history of the media and the magazine, which make it different. So I don't see Playboy Kids coming to the United States, but what I will say is that, very, very encouraged by the Gen Z audience that we do have and them loving to wear the brand.
Yeah. So maybe last couple questions. So you mentioned the gaming side of the business. You've talked about doing more in-person experiences, the Playboy plane. What should we be looking for as far as those types of activities? Yeah,
the paint job on the plane looks amazing. We're going to be using it for our influencer activation, coupled with the Big Bunny launch. We just had a great live experience in partnership with Tao Group last week in Vegas for our Midsummer Night's Dream Party. I would consider, or you should expect to see more live experiences coupled with virtual experiences moving forward, all geared to what we've talked about with membership. But look, I think this brand is best when people can experience it, whether that be physical or virtual. And I think that will be part of our strategy moving forward.
Who would you say is your biggest competitor?
Look, I mean, this is one of the hardest things to answer. There's competitors in the product categories that we're in. So would you say in lingerie, Victoria's Secret's a competitor? Sure, it's huge. It's a huge business. So is La Perla, so is Agent Provocateur, et cetera. But as a brand, I can't think of another brand that is a competitor to us for everything that we play in. On the product side, yes, but this brand is so unique. And this is why I think this brand is really priceless and worth multiples of our market cap today. Which is, give me another brand that sells product in 180 countries, that generates over $3 billion today in spend, that's valued where we are. I just can't think of one, especially for one that can play in the number of categories that we can play in, right? From spirits to gaming to hospitality to clothing. I just can't think of that. Now, as a team, we have to be really, really careful, and we have to stay extremely focused on our priorities and making sure that we deliver and execute on what's in front of us. But the roadmap long-term really gives us endless growth possibilities.
Okay, so there's no direct comparison as a brand. What's a brand that you admire, whether it's a competitor or not, that maybe you think is Playboy should be included in the same sentence as this brand?
Well, look, I think so highly of Nike. I mean, what Nike has done in their transition as a business model is unbelievable. I even go back to Ralph Lauren and say, what Ralph did. Ralph was a business that was a little dated. It's become very relevant. They have live experiences in the Polo restaurants, et cetera. But more importantly, it was a business that had been licensed out. And they took all that back in-house over a multi-year period, and look at their e-commerce business today. I mean, Alice DeLaHunt has done just an unbelievable job there on e-com. She had been at Burberry. And so, but again, I think Nike is the pinnacle and what they've been able to do. So I would love one day to be included in the same sentence, but that's a pretty high aspiration.
Well, hey, I mean, maybe you're in the running for them with them on Instagram followers or something like that. You can compete on at least one of those fronts. Maybe last question for you. So if we look out 5 years from now, what's the biggest change that this business has undergone? And what are you most excited about?
Yeah, look, I think you look out 5 years, I think it's just continue to execute on what we've outlined already. And I think that change from a media company to that of a lifestyle brand is the single biggest change. Look, I think that I'm really excited by this combination of virtual and physical coming together in this community. And I think this is a brand that has historically, had membership. This is a brand that has historically had a really vast community. And I think when I look at the influencers that we work with, coupled with the products, I long-term, I want to have a significant portion of our revenue coming from recurring revenue streams like we have with our licensing business, which is a quasi SaaS business at the end of the day. And I think this brand has the possibility to do all of it. We just have to, again, stay focused as a company. And that's the biggest thing for our team right now.
Yeah, get that dollar share in the market to match the mind share among consumers. Ben, I'm so excited to continue to follow the work you're doing. Thanks so much for spending time with us, and I hope we can talk to you again soon.
Yeah, this was great. I appreciate it. Thank you.
As always, people on the program may own companies discussed on the show, and the Motley Fool may have formal recommendations for or against the stocks discussed. So don't buy or sell anything based solely on what you hear. Thanks to Tim Sparks for mixing the show. For Ben Kohn, I'm Nick Seipel. Thanks for listening, and Fool on.